billion owed. The phones, unanswered. The offices, empty. The founders, gone, on a $50 million yacht.
They borrowed billions from every crypto lender in the world. None of the lenders knew about the others. When the losses hit, they stopped answering the phone. Two men, $3.5 billion in debt, disappeared onto a $50 million Superyacht. This is Three Arrows Capital. They borrowed billions, not millions, billions from every major crypto lender in the world. Genesis Capital, Celsius Network, Voyager Digital, BlockFi, Babel Finance, all of them lent money to the same fund. None of them knew how much the others had lent, and then in June 2022, the fund simply stopped responding. Phones, unanswered emails, ignored offices, empty. Two men who had borrowed billions from the global crypto industry had vanished. This is Three Arrows Capital, and this is the story of how two friends from the same prep school built the most reckless hedge fund in cryptocurrency history, collapsed it in spectacular fashion, and then disappeared onto a super yacht while their creditors lost everything. Suju and Kyle Davies met as teenagers at Phillips Academy Andover, one of the most elite prep schools in America. Both were brilliant, both were ambitious, both were drawn to finance after graduating. Suju worked at Credit Suisse. Kyle Davies worked at Credit Suisse in 2012 at just 26 years old. They left their banking jobs and founded Three Arrows Capital in Singapore. In the beginning, Three Arrows was a legitimatory exchange trading fund. They were good at it. Over the years, as cryptocurrency exploded, they shifted their focus entirely to crypto, and they made extraordinary returns. By 2021, Three Arrows Capital was managing an estimated $18 billion. $18 billion. They were the most influential hedge fund in the world. Every major crypto project wanted their backing. Every major lender was happy to extend them credit because Three Arrows Capital had never lost. They had a track record that seemed almost impossible. Consistent, massive returns in a market that was growing faster than anything in financial history. Suju became a celebrity on crypto Twitter. He posted about his ultra-high conviction bets. He talked about the supercycle, his theory that cryptocurrency would never experience a prolonged bear market again. He bought a super yacht, reportedly worth $50 million. He bought a luxury penthouse in Singapore, reportedly worth $35 million. Kyle Davies bought a villa. They lived like kings, and they borrowed like there was no tomorrow because they genuinely believed there was no tomorrow in which crypto would fall. That belief would become the most expensive mistake in cryptocurrency history. Behind the scenes, Three Arrows Capital was not managing $18 billion of investor money carefully. They were using extreme leverage, borrowing massive amounts against their positions, making concentrated bets on assets they believed could only go up. Their largest single position was in the Terra Luna ecosystem. When Terra Luna collapsed in May 2022, losing $60 billion of value in 72 hours, Three Arrows Capital lost an estimated $200 million instantly. But the losses did not stop there because Three Arrows had borrowed so heavily, using their crypto assets as collateral. As the value of those assets collapsed, margin calls began arriving from every direction simultaneously. They had borrowed from Genesis Capital, they had borrowed from Celsius Network, they had borrowed from Voyager Digital, they had borrowed from BlockFi, they had borrowed from Babel Finance, they had borrowed from dozens of other counterparties, and they could not repay any of them. The total amount Three Arrows Capital owed to creditors was estimated at over $3.5 billion. $3.5 billion borrowed from the instituted short ordinary crypto investors had trusted with their own money. When Three Arrows could not repay, the damage cascaded outward. Voyager Digital filed for bankruptcy. Celsius Network froze customer accounts. BlockFi collapsed. Genesis Capital collapsed. The Three Arrows Capital collapse was like a stone thrown into a still pond. The ripples destroyed everything they touched. And where were Suju and Kyle Davies? This was happening. They were not in Singapore. They were not answering calls from their creditors. According to reports at the time, they were on Suju's $50 million Superyacht somewhere in international waters. They had fled in June 2022. Three Arrows Capital filed for bankruptcy protection in the British Virgin Islands. The liquidators appointed to recover assets for creditors found almost nothing. The $18 billion fund had almost nothing left. Suju was eventually arrested in Singapore in September 2023, attempting to board a flight out of the country. He was sentenced to 4 months in prison by a Singapore court for failing to cooperate with the liquidators. Kyle Davies was never arrested. He remained outside Singapore and did not appear to face criminal charges as of mid-2025. The liquidators continued their efforts to recover assets for creditors with limited success. Made Three Arrows Capital especially destructive was not just the amount of money lost, it was the structure of the damage. The companies that had lent money to Three Arrows, Genesis, Celsius, Voyager, BlockFi, had themselves borrowed that money from ordinary retail investors, real people who had deposited their savings trusting those platforms. When Three Arrows collapsed, it did not just hurt sophisticated investors, it destroyed the savings of hundreds of thousands of ordinary people across the world who had no idea that their money had ever been lent to a hedge fund in Singapore. This is what happens when leverage, confidence, and the absence of regulation combine in a market with no circuit breakers. Most sophisticated actors are supposed to be the most careful. Three Arrows Capital prove that sophistication and recklessness can coexist perfectly when there are no consequences for getting it wrong. So what is the real lesson of Three Arrows Capital? Jew and Kyle Davies did not set out to commit fraud in the traditional sense. They were not manufacturing fake accounts. They were not inventing fake technology. They were making real bets with borrowed money in a market they genuinely believed never fall. The fraud was in the borrowing, taking money from lenders who did not know how much they had already borrowed from others. The fraud was in the silence. When the losses began mounting again, they said nothing to their creditors, and the fraud was in the disappearance, boarding a super yacht while the people they had borrowed from were explaining to their own customers why they could not return their money. That is the capital case. When the most sophisticated players in a market treat risk as something that happens to other people, the consequences always fall on everyone else. Subscribe to the capital case because the next case is already waiting.